So if you recall my past sessions, I think there's certainly started probably here. I talk about potential rally, very similar to March rally, because of the shortening of the trust right here, and then we can expect some kind of the rally similar to March. I think that already manifested. So this is the current rally. That's the March rally. So in fact, if you count it from the bottom in June, that is actually the best rally in terms of the magnitude. And I would like to show you with the market breadth as well, because the market breadth actually is some kind of the best, and we can call it a change of character in the market breadth as well. So definitely a lot better than in March. So at least I see a lot of the stocks participate in this rally. So unlike March rally, although in March rally, there's not too bad, but certainly mostly driven by the oil-related stocks. Okay, so at the moment, this current rally, there are two analogs. First is definitely the one that I have been emphasizing a lot, is the March rally. Second is this rally. So this is the March rally out from this oversold condition. Okay, so in terms of the price and volume, so for the price, so let's just take a look at the price first. So this is really like a selling climax or localized selling climax, and we got a automatic rally here. So this is certainly came out from like a small accumulation range. Then we have this sort of the rally, because right after this oversold condition, we have kind of a technical rally or automatic rally, but subsequently have been ranging for quite some time, and eventually that actually build up courses, and the projection actually lead to somewhere around here. If you recall my session probably 2 or 3 weeks ago, where I used the point and figure chart. Let me quickly bring it up. Okay, so you can definitely see that this is the courses view, and the immediate target is 4160. So I think we just reached that 4160. So it's right within 41 to 42. So this is just a logical place to have a reaction. So far, S&P 500 is just testing this resistance zone. So that PNF chart from session 49, which is 24th of July, has worked out very well. So the first immediate target has reached. So at the moment, I think the crucial part, the key component, is that we need to look at whether there will be a reaction, or should a reaction come, how deep is the reaction, or how shallow is the reaction, whether it would it break down like this, or would it simply have something like this. So back to the chart. So far, here's a reaction. We just right within the zone already hit the immediate first target, which is 4160, testing the resistance zone, and we did get the reaction. So here's a reaction, and on Thursdays, the doji, Friday is also definitely another reaction. So the good news is, based on the past few weeks reaction, I think since the CPI right here, and GDP, and also the non-farm payroll, so all of this are kind of like the negative headlines, negative news. And what did the market react? So I think that's very important in terms of the sentiment wise, because if you recall, like back in December last year, so somewhere around here, there are a lot of the earnings or decent economic data coming out, but a lot of the stocks are tanking, so drop like hell, especially the growth stocks. So during the end of the bull market, usually that we see a lot of the good news or even good economic data, but the stocks actually react quite badly, react negatively. However, during the bear market, right now, right here, or especially I call this potential bottoming process, because bottoming is certainly is a process. It's not a V-shaped rebound, although there is certainly this kind of the scenario, but in this case, bottoming is definitely a process. So it doesn't really involve like immediate quickly reversal, and then you see that it's shooting up and run away from you. So that's very important. And slowly, we already get some kind of a negative news, like very bad CPI data, but it didn't really create a lower low. Bad GDP, like almost, I think, is kind of like technical recession, although probably it's not officially announced, but it is not a point. The point is, this is the negative news, negative headlines, negative economic data, but how does the stock market react? How does the indices react? So that's the most important part. So far, we see that the reaction has been encouraging. So despite this kind of the attempt to have a reaction, attempt to have a pullback, sell off, market is still holding up. So in terms of the supply, we see that has been decreasing throughout. This is also another encouraging sign for the bull. So far, I wouldn't say that the reaction comes with very low supply. In fact, you can see that this is kind of the supply, slight increase of the supply on here. But what's the results? And also on Friday, consistent supply right here. What's the results? So the results is merely this hammer, or at least a demand tail. This is very shallow type of the pullback. So that suggests really there are some form of the absorption involved. So we see that the reaction is very shallow. This is very encouraging. So unlike the analog that I pointed to, for example here, if you compare the spreads, look at this, big candles, slightly small candles. So this is certainly another point, another bullish point. And let's look at this. Okay, reaction, quite a big candle, big bearish spread compared to here, small spread one. So far, it has acted very positively so far. And in terms of the volume, here seems like quite high. Here compared to here is definitely decreasing. So I think in terms of the volume, supply has been decreasing. Although localized, you see that it's quite a consistent supply. It's not like a very low level of the supply, so supply is still there, but there's certainly absorption in both. And if we compare to here, I would say that, well, supply is probably not as high or maybe slightly lower, but the results is kind of like the ease of movement. So the results actually kind of overwhelming. We got a bearish spread, so definitely not good. So if you compare to the past analogs here, compared to the current situation, so far has been acting very bullish. So I still do not see immediate sign of the reversal, although there's certainly shortening of the trust and right within the supply zone or the resistance zone. That's why we see that there's a reaction, attempt to react, but got the demand tail. So far, I believe that it could still go up and create up trust. So at that time, then we definitely would like to see some kind of the reaction. Maybe it could still consolidate a little bit before it can just run a bit higher. Because at the moment, if we look at like another trend line, probably somewhere around here, something like this, then I think that could actually point to somewhere around 40, 43. Sorry, I think the trend line wasn't drawn very nicely. Probably this is slightly better. Okay, somewhere around here. So probably here is another level that coincides with this supply line here within the Dow channel. Okay, so next is actually in terms of the market breadth. So what's happening for the market breadth? So we had already looked at the price and volume in terms of the short-term analog. We compare it with the March rally here, and also we compare it to the automatic rally from May. So in terms of the market breadth, how does it look like? What's the difference for now? So far, if we compare first here, the current rally, and below is the actual market breadth. So you can see that this is using S&P 500 above the 50-day average, ticker symbol S5FI. Okay, so if we compare here, so far, is sort of hitting this level, 72, 75, so somewhere around here. So if you look at the previous trend here, that certainly acted as a resistance zone. So we already bumped into the resistance zone right here. Okay, so certainly not that encouraging because it is testing the resistance, and we see that there is reaction. So here's a reaction, pullback. Okay, previously in March, when the market actually bumping into the resistance, create the uptrust. This is a temporary commitment above the resistance level, and then eventually break back down, fell back, and then break below. So the market breadth in March actually just shoot up to somewhere around, I would say maybe 75 right here, and immediately it just reversed quite significantly. So in terms of the spread, so in the market breadth, we can also compare the spread as well. So in terms of the size of the candle, the spread, big spread here, small spread, little candle, big candle. Okay, so that's also an encouraging sign. So that also means that there are also quite a lot of the stocks actually holding up the gain. So there are about 72% of the stocks in the S&P 500. They're actually above 50-day moving average. So unlike the previous March rally, so when it hit this immediate level, immediate resistance, in terms of the market breadth is somewhere around maybe 75, 80%, then we see that the reversal happened almost immediately. So right away, there's a reversal and then have a pullback. But here, look at how shallow is a pullback. So it's sort of holding up the gain, and there are more and more stocks just want to hang above the 50-day moving average instead of behave like in March. Oh, okay, we hit 75%, now we want to go down. So only left 60%, and eventually we just go down. So in terms of the market breadth, there are more stocks actually supporting the index, for supporting the S&P 500. And if we compare to May, so what happened to May? So in May, that's the rally off from the oversold condition. There's a rally. But in terms of the market breadth, look at this. It just rallied off the oversold level of about 10% of the stocks, go to even below 50. So that's pathetic. So that's miserable. That certainly is not good enough. But if we compare to the current market breadth, it just have a significant rally. So that actually means that a lot of the stocks, at least 70%, 72% of the stocks are committing above 50-day average. So a lot better than in May's rally. And so far, the pullback is better than March rally. So in March, it just sort of like create uptrust, a temporary commitment, And with the stocks as well, uptrust, temporary commitment, and then we got less and less stocks participate the 50-day moving average. But not now. So now we have a lot more stocks actually holding up the gain, 72% of the stocks. So I think that's also another encouraging sign. So from the price and volume point of view, I haven't found like very threatening issues. And from the market breadth, I see that there is definitely bullish aspects. So overall, I still see that there is further upside movement for the S&P 500. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.